Okay, imagine this. You have watched all of the YouTube content, you've listened to the podcast, how to make six figures in 60 days, the roadmap to your first million. But one of the things that I don't hear people talking about is great, now you've got the revenue stream, but what about the accounting? What about the tax strategies? Am I set up in the right entity type? What's an entity type? What's a sole proprietorship? What's an LLC? What's an S corporation? Let me bring some clarity to you to help give you some understanding on what these decisions mean, very high level, and when to make them. Specifically, I want to talk about LLCs and S corporations. When you do this research online, you're going to get a big bunch of information that says S Corp. You should be an S Corp. And I want to make it very clear because I get this question a lot in my practice is I want to be an S Corp and how do I do that? The S Corp in itself is not a legal entity type. It is a tax election that sits on top of your legal entity. So you go to the state, you get your LLC, you get your corporation, and then you say to the IRS, please treat me as an S corporation for tax purposes. So then once you decide, hey, maybe an S Corp makes sense for me, the next question is, when do you make that tax election? So I'm going to go over to my whiteboard because I'm an accountant, and of course I've got a glorious whiteboard, and we're going to walk through an example. Okay, so let's go through an example. Let's say I've got client Joe's Hilarious T-Shirts LLC. He's got on that print-on-demand wagon, hardcore, and he set up an LLC per his accountant or attorney's advice. Hey, you need some liability protection. Get yourself an LLC. So Joe's Hilarious T-Shirts brought in a gross of $1 million this year, thanks to all the strategies on YouTube. And he incurred costs of $825,000, leaving him a net of $175,000. So over here, for the way that this works for tax purposes, as an LLC, if this is Joe's share of the income, Joe is subject to self-employment taxes as well as income taxes on this income. And what that means is he's going to pay Social Security at 12.4%. He's going to pay Medicare at 2.9%. And he's going to pay income tax on ordinary income. And I'm going to assume 20% here. So in total, he's paying 35.3% on this amount. And I've done the math, and just to be very fair, what happens is this $26,775, which is 15.3% of this, is what Joe will remit with his tax return, assuming he is a single member LLC. Then in addition to that, Joe's going to have income taxes of $32,322. But because Joe is serving as both the employer and the employee of this LLC, he does get to claim a deduction for 1/2 of the taxes for the self-employment. So while he gets to deduct this $13,388 at arriving at his taxable income of $161,000, he still has to remit all of it. So now he's made an election. He just filed a single form with the IRS. The states almost always honor it. Nothing separate that you have to do. But now what Joe has done, he said, you know what? I'm an employee of my business and I'm an investor in my business. And this is the design of the S Corp. It is supposed to be kind of a hybrid entity in that it allows you to be actively involved, wearing the hats as an employee, I'm the owner, and kind of collecting what we would normally consider like a dividend. So now Joe has his LLC with the S selection. Same income, same expenses. Now what we've done is Joe is an employee, so he's going to be compensated as an employee. So Joe's taken $100,000 of wages. These wages are going to be tax deductible to his business. And so his net from the business is now $75,000, not the full 100. Now Joe's exposure for self-employment taxes goes down to $7,650. This is coming out of Joe's W-2. And the other half is coming out of Joe's business. And all of this is going to be handled through payroll. So we're not going to really feel the effects of this the same way we would as if Joe was writing a check for $27,000 over here. And I'm rounding up because I like rounding. But let's look at how his tax burden changes. So over here, this self-employment taxes does not need to be remitted with his taxes, but his taxes are a little bit higher, this $35,000. But if we look at the total economics of this, Joe's got his income taxes of $35,000. In total, he's going to have the self-employment taxes between him and his business of $15,300. So I put my little number down here because I don't do math in public unless it's like this. So the total cost of this was $50,300. If we come over here, our total cost, and this is the remittance, is the $59,097. So you can see here that by filling out this form with the IRS and taking payroll, Joe's been able to save himself about $9,000. You can imagine that as Joe's income goes up, let's say he gets these costs down to $600,000 and this net gets higher, the amount that he's able to protect from the self-employment taxes also goes up. So that begs the question of, when do we make this election? Because the other thing that we need to understand here is there's a little bit more compliance that goes along with this. Payroll is required by the IRS, because you could see if I was an owner over here and I was like, I'm going to pay myself $7,000. Now I've got a whole lot of income sheltered from self-employment taxes. The IRS is hip to this strategy. This is a high audit area. The IRS requires you take reasonable compensation. So have to have payroll. If you already have payroll, this is a no-brainer. This entity now is a pass-through entity like this one, but it does require a separate tax return. So, obviously tax returns in San Francisco are a little bit more expensive than if you're in Podunk, Wyoming. No offense to Wyoming. Tax returns, the annual tax compliance. I will say that if I have an S Corp that is not keeping track of the accounting in an accounting system, that's uncomfortable for me. I'm going to encourage you at this point, go get yourself a QuickBooks, because now you have payroll taxes and you have shareholder bases. So there are additional complexities. So if you pull the trigger on this too soon, you could be eating up your savings over here with all the additional compliance costs. However, as these numbers get bigger, your opportunities for savings go way up. So something that I have created, because this is a tough one to try and figure out, hey, am I ready? So I've created a survey to kind of help identify when's the right time to make this election. I'm going to put a link into the show notes so that you can check it out. It's totally free. You just go, you fill out a form, and based on your responses, it's going to email you some results that are going to be a suggestion as to, are you eligible to make the S election? There are some limitations on what you can do here in regards to how many shareholders you can have. If you have foreign owners, that's a hard no. So it's going to give you some feedback on whether you're eligible to make the S election and whether it's time to make that election. Because as you've seen here from this example, the bigger the numbers get, the more opportunities for savings are. Hope this was helpful. Love to hear your comments about what other things you'd like to learn about. Like and subscribe.